Identifying elderly abuse. As our population ages, elderly financial exploitation is becoming a growing concern. Financial exploitation has been called a crime of the 21st century by the Consumer Finance Protection Bureau. Unfortunately, the perpetrators of these crimes can be family members, caregivers, or even strangers. In this module, we'll discuss what exactly is elder financial exploitation and what are ways criminals exploit the elder generation. The course should take approximately 5 minutes. After completing this module, you'll be better able to recognize and reduce the risk of elder financial exploitation and report elder financial exploitation to your supervisor or manager. Now let's discuss, what is elder financial exploitation? Elder financial exploitation is the illegal or improper use of an elder person's funds, assets, or property. Elder financial exploitation is also referred to as fiduciary abuse, economic abuse, financial abuse, and financial mistreatment. The word elder means any person residing in the state of California 60 years of age or older. Did you know? In 2010, elder Americans lost at least $2.9 billion to financial exploitation. Also, did you know 1 in 10 Americans aged 60 or older have experienced some form of elder abuse? Now we'll discuss some examples of elder financial exploitation. Paid caregivers can be change from groceries that were purchased. A person using the elder's credit, debit, or ATM card without permission or knowledge. A person that drains the elder's bank account without knowledge or informed consent. And wrongfully taking property such as cars, home, land, or jewelry. Now let's discuss, what is a mandated reporter? Mandated reporters include all officers and employees of financial institutions. Financial institutions include federal or state credit unions. California Welfare and Institutions Code, Section 15630 states, mandated reporters shall make a report whenever the mandated reporter, in his or her professional capacity or within the scope of his or her employment, has knowledge of or observes abuse or neglect, is told by an elder or dependent of abuse or neglect, or reasonably suspects abuse or neglect. A reasonable suspicion is when a person entertains a suspicion based on facts that could cause a reasonable person, drawing when appropriate, on their training and experience, to suspect abuse or neglect, including financial abuse. It does not require certainty that the financial abuse or neglect has occurred, and any reasonable suspicion is sufficient. Abuse and neglect can include theft, fraud, misuse of funds, property extortion, and duress. You cannot be held liable for making a report. However, you can be held liable for not reporting. How does financial exploitation occur? An elder adult can be exploited in the following ways: without his or her consent or knowledge, by trickery, intimidation, coercion, or exerting undue influence, and cognitive impairment so the person cannot give valid consent. Financial exploitation of an elderly person can be classified in 2 categories: a person known to the victim, or exploitation by a stranger. Now let's talk about recognizing financial exploitation. Warning signs and risk factors for financial exploitation. Is the elder adult freely making a bank transaction? Is the elder adult using informed consent? Is the elder adult confused and cannot give consent? Or is there suspicious activity coupled with unusual behavior? Here's some additional warning signs of potential abuse. Does the elder look like they don't know the person they are with? Are you noticing that the elder is being escorted into the bank and directed to go to the teller and request certain things? Is the elder looking to his or her companion as if they are being controlled by that companion? Is the elder's companion doing all the talking? Is the elder requesting money or a wire transfer because their loved one or grandchild was in a sudden accident or injured in another country? This could be a scam commonly known as the grandma or grandchild scam. You're performing a transaction for a 90-year-old member and they're stating they're taking the money out to buy them a new car. You might want to ask them, why are you buying a new car? This may be a sign of elder financial exploitation. While performing a transaction, You notice a ATM card was used after midnight, and you have an 85-year-old member at your window. This could be a red flag. The elders who are at most risk are adults who are frail, ill, disabled, depressed, or alone. Adults who are physically or emotionally dependent upon others. Adults who need help with finances or have never managed finances before. And adults who are confused or have dementia. If you see something, say something. Get your supervisor or manager involved to discuss. Here are the key learning points of this module. Elder financial exploitation is the illegal or improper use of an older person's funds, property, or assets. As a mandated reporter, financial institutions are required or mandated to report elder financial exploitation under California law. And the signs of elder financial exploitation may differ from indicators of other fraud types. Talk to a supervisor or manager if you have any questions.